And welcome everyone to our PI Primetime presentation. Today we'll be teaching you a little bit more about RIT's budget language and how to interpret your Oracle grant statement. So as Lori mentioned, I'm the SPA rep for NTID. I'm the post-award financial SPA rep more specifically. So what that means is that in my role, I look at the financial information after the grant has already been awarded to RIT. And part of that process is when we get a new grant, I take the proposed budget that was given to me and I try and attempt to convert it into our Oracle budget that I then upload into Oracle, which is the system that we use here at RIT. Once I upload the budget into the Oracle system, what ends up happening is that it could end up looking very different from the proposed budget and what the PI is used to looking at and what they've been looking at from a pre-awards perspective. So on the SPA grant statement, which is what you would find in Oracle and what your research admins send to you on a monthly basis if you're a PI, you'll find the start and end dates of the project. And if you get an extension, that will be updated in Oracle at the time. So you'll see the updated dates as well. I assign the grant a project number, and that account number will show up on the grant statement for each specific grant that you have. If you have 3 grants, you'll have 3 separate grant statements. And on the SPA grant statement from Oracle, we have broad budget categories. There's the revenue, direct costs, and then indirect costs are the broad categories. And what I try to do when I'm setting up the project initially and I'm uploading the budget is I try to take the key components from the proposed budget and I try to see where they will fit best in the Oracle budget. So there are specific items such as, senior personnel or students. There's also travel sometimes. There's the indirect costs and things like that. So what I try to do is fit those pieces from the proposed budget into what category in Oracle I think they'll represent. And throughout the presentation, Sue will go into the different categories and you'll actually be able to see a grant statement and see the structure. But I just want to give kind of an overview of why we do this and why it's set up this way. And within those broad categories, there are also subtotal lines. So for the salary section, there's a subtotal for senior personnel. There's a subtotal for students, things like that. So it's important to keep in mind that oftentimes you'll have to use the subtotal lines rather than a line by line explanation to figure out how much money is left in the budget. And again, we'll go through this, but I just want to give a high level overview. The reason for this is because a lot of times when we're working with a proposed budget, when it comes time to actually have expenses hit the grant, sometimes the expenses are different than what was originally proposed or originally budgeted. So we use the broad categories on the budget side, but when we're actually accumulating expenses on the grant, they might be different from what we had originally thought. And that's okay, but we just have to keep in mind when we're looking at the grant statement. For example, if you had originally budgeted for student wages, but now you ended up actually hiring a co-op or a student who's on federal work study, those get charged to the grant a little bit differently. So in that case, you would just want to look at your subtotal line for students on the grant statement to get an idea of how much you have left in your student budget.
Within the Oracle budget, there are headings, and we're going to be showing in a couple more slides, we're going to be showing an example of a spa budget so you can actually see what we're talking about. But just to give you a heads up, on the slide, you'll see all the bulleted points are the headings across the top of the budget. So you'll see what your total budget is for each category that was set up from the proposed budget. Then you'll see a column called encumbrances. What that entails is money that you know you're going to be spending that's being held, and it's called encumbered within the budget. It actually, an example would be if you have a purchase order for interpreting services, for instance, once that PO gets approved in the system, the entire amount of that PO will show up under encumbrances because it's earmarked for that specific purpose. And that amount has been removed from the bottom line, your budget's bottom line. So it's being held until it gets spent as invoices get paid. Then there's the column is the current monthly. Month by month, you'll get reports from me and Mary. And in those reports, you want to look at that column that shows what got spent, what expenses hit the budget during that month. And then the next column it's PJTD on the budget sheet, but what it means is project to date, the actual total for that budget line that has been spent so far. And then next to that is the available balance. And then the percent of your original budget that has been spent. So in those major categories that Becca was talking about, revenue is at the top of the budget statement. You'll see revenue at the top. That's where if you get payments, as payments come in to the grant from the sponsor, that's where you'll see the revenue. And then below that starts your expenses, your direct costs and your indirect costs. And when we get to the slide showing the sample, I'll review that again. But under the expenses for direct costs, you'll see things like salaries, benefits, procurements, any kind of purchases. And then the indirect costs would be the F&A that gets charged to the grant. Okay, here's an example. It's very small and I hope you can see it. But you'll see in the blue strip across the top, those are the columns that I was talking about. And then across the left-hand column, all the way down, that's how the budget gets broken out by the broad categories and then specific line by line items within those broad categories. You'll see subtotals and then totals for each category. And if you look way down at the bottom, on the right-hand side, way down at the bottom, the very last two columns on the right is probably the ones you're going to be most concerned about each month. It shows you what your available balance is, and then the percentage that you have spent on the grant. In this particular sample, it's 98.99% spent And there's $3,144.24 left. Okay, we're going to talk a little bit. This is one of the most important categories, broad categories that shows up. It's for salaries. And under salaries, it's broken down by your senior personnel, your students, and then the benefits. Under the senior personnel, you may see different lines for faculty academic year salary, faculty summer salary, maybe a postdoc salary, staff, professional staff salary. That's where it gets broken down as you go down deeper, drill down deeper into the budget statement. That's where you'll see line by line. And then the type of salary determines the benefit rate, but all the benefits for each month get lumped into one benefit line. Their benefits are not broken out by individual. It's just one, you'll see one figure for benefits. Student wages, you'll see different lines for regular student employees, co-op students, grad assistants. They each have a different object code. An object code is in it's RIT language for the category, the type of student that's being hired, and the type of faculty or senior personnel, the type of the salary that's being paid. Student wages don't generate any benefits. So the benefits you'll see is just for the faculty and staff. This is an example. Actually, these are two examples of specific budgets that are in addition to the main grant budget. Some grants have earmarked funds specifically for cost share. If there's a requirement in the grant that there be cost shares, there's a separate account set up, and this is an example. So the cost share account is called a C account, letter C, and the participant account is called a P account. Those usually have categories such as travel, maybe. Our REU summer programs have a lot of other categories such as housing and meal plans. Those are all included in a participant account. The main thing to note, if you have one of these special accounts in addition to your main account, you'll receive two budget statements from Mary and I, one for the main account and one for the special account. And the money that's in these special accounts cannot be transferred to the main grant. You can only, they're restricted funds. You can only use them for the special purpose that they are set up for. Under procurements, we have included these categories: capital equipment, materials and supplies, all kinds of, there's many different travel subcategories, and professional services such as interpreting services, captioning services, that kind of stuff. And then independent contractors, and then miscellaneous. The miscellaneous could include payments to human subjects, publishing expenses, GRA payments you'll see under procurements, temp help, ITS computer charges, prepaid advances, and FACED funds you'll see for FASED funds for interpreting. So you'll want to look at the subtotals in each one of these categories. For instance, under travel, there are many different travel lines that are broken out, one for airfare, one for taxi, ground transportation, another one for meals, those kinds of things. But if you look at your total, subtotal, and totals in that category, that'll give you an idea how much you've already spent for travel. In most cases, you can move money within these lines. And Becca would be the one to ask about that. Okay, this is an example in a grant budget that shows subaward fees. You'll see payments at right under the blue stripe. You'll see two different subawardees, and there's fees paid, and that's for the less than $25,000 where F&A is charged. And then down below, the non-direct costs, Becca, am I saying that correctly? The greater than 25,000?
Yes, Sue, you're correct.
Okay, thank you. And then you'll see in that encumbrances column that there's encumbered money for those subcontractors. That's money that's earmarked. It's taken, already removed from the budget bottom line, and it's held there because you know you're going to be spending it. And as payments get made to the subcontractors, you'll see the encumbrance amount being reduced. And then that amount, whatever the payment is, will show up in your monthly column that a payment has actually been made and how much it was. This is going to be very difficult to see, but when we send you, we'll be sending you all the slides so you'll get to see them. This is a sample account analysis report. The ones that I send to my PIs and probably Mary's as well look a little different than this when you receive them, but they have the same types of information in them. It will show a specific expenditure, the details of it, who it was sent to, who got paid, when the payment actually happened, what 24-digit account number in your budget was, or line item in your budget was charged. What's nice about these reports is that they can be customized. If you, for instance, if you want to know how much you spent in year 3 of your grant on travel, we can run a report that will show you just that information. And it'll be a smaller version, simpler version of this. This has a lot of expenses on the report on the screen. Typically, our reports are not quite as scary looking. And that is all for our slides. Do you have any questions for us? Okay, we have a question from Bob. This is wonderful but complex information for some. If a PI were to ask, what are the most important things I should look at in these reports? What are the most important things I should look at? Well, that's what Mary and I are here to help you with that. and help you, and Becca to help you decipher each month's reports. And we will alert you if we see something that doesn't seem right. The main things to look for are the monthly expenses. Did the expenses we processed for that month, did they actually hit the budget? And if they didn't, we need to investigate why they didn't. And then those last two columns down at the bottom that I mentioned, your available balance, that's your overall available balance and the percentage of the budget that's been spent.
Yeah, Sue, I'll also jump in. I definitely think the percent spent at the bottom in total on your project is a good place to kind of start when you get a grant statement, and then compare that percentage to how far along in the grant you are. You know, if you're halfway through a grant, that number should be around 50%. If it's not, and it's, you know, way higher or way lower, then you should be investigating, or you should work with your research admin or your SPA rep to set up a spending plan for projected expenses so that you can get back on track. I'd also say the available balance, definitely you don't want to see your grant go into deficit. So again, just making sure that you're on track in terms of time elapsed during the grant and percent spent, I would say are definitely the most important, as well as the monthly expenses like Sue mentioned.
If you look under, if you can see faculty salaries, that is overspent, it's over budget, that particular line on this report. So that is something that we would point out to the PI, you're overspent here. We need to figure out how we're going to manage that budget category. And then we would use the subtotal salary amount to let us know how much over budget we are. In this particular case, that one line is over by more than 8,000. But when you look at the subtotal salaries, it's still over, but by much less, by 3,600.
I think this ties in with a question that we got about, you know, when you have a question, how do you know if you should go to a Sue or Mary, or if you should come to me or the SPA rep? And I think this ties nicely into that, because on a monthly basis, you'll get your statements from Sue or Mary. And in this case, like Sue said, if they mention that there's a category that's over budget and you might need to pull money from a different category, you could talk about it with Sue or Mary and discuss it initially, but then that's where I would come in and I would tell you whether the sponsor says that you can move money from another category, or if they dictate how much you can move from another category. Those sponsor specific questions I would be able to help out with, and I'd be able to tell you if you can pull money from a different category to be able to cover a deficit in a different category. So that's just one example of where I would step in my role as a SPA rep. There's many other cases, but just so you can get an idea of the difference in the roles there as well.
Also on this sample, under other direct costs, if you look at the second to the last column on the right, many of those expenses they're in parentheses, and that means they're over budget. But then if you go down to the subtotal doesn't indicate that it's over. That budget is fine in that category, but you may be over budget specifically in all of your travel categories if you totaled up those, for instance. So those are things that we can help you with.
What do I wish PIs would pay more attention to in the reports? to lower audit risk and reduce dependence on the research team. I would say from a SPA perspective, Sue mentioned it before, but just looking at your monthly expenses every month and just making sure that they make sense. If you see a really high number in the student wages category, you know, maybe there's a student who's still working on your project who really shouldn't be, and they should have been moved to another project, but that change never happened. So if you're looking at expenses for that month specifically, those things would be easier to catch. And if we catch them timely, it lowers our audit risk. So I would say that's definitely the most important thing, is just do the expenses make sense? Are they ballpark what you were expecting? You know, if you see things like an equipment was purchased on, or there's an expense on the equipment line, but you know you didn't purchase any equipment, that would be something that you would want to point out. So just looking at those things, and then that helps us to identify potential errors sooner and thus lower our audit risk as well.
Also, any money that's held as an encumbrance in that encumbrances column, if you find later on in the grant or later on in whatever year that you're working in that has an open PO or in a subaward contract going, if there's money held in the encumbrances that you know you're not going to be needing, that PO can be closed out, and then that money gets released back into the main total of your budget. So it can be used elsewhere. So those are things we look for also.
Yeah, adding to Sue's point, that happens a lot with subawards because we do encumbrances for subawards. And if you're communicating to your subaward institute on a regular basis, and you know they're not going to be spending the full amount of funds that you gave to them, maybe they're just behind in their spending, or maybe they didn't need as much money as they thought they did. If they're communicating that to you, you should be communicating that to your SPA rep and your research admin, so that we can figure out if we're going to be able to absorb any of that money back into the budget. Like Sue said, if we can close out that PO and reabsorb that money that won't be spent by the subaward or any PO really, that's helpful in our planning process. So definitely things you want to discuss.
Is it more common to have a surplus or deficit at the end of the grant period? If a surplus, the money has to be returned to the funder, correct? I'm going to let Becca answer that question.
Sure. I would say it is more common, at least in my experience, to have a surplus at the end of a grant. If you have a deficit, hopefully it's a small one. But yes, you are correct in your understanding that if there is a surplus, in most cases, the money has to be returned to the sponsor.
If you have a deficit, it has to be paid for out of another project, not a grant, but an F&A account or an internal department account, something. It has to be paid. So our goal, what Mary and I will do for you, for our PIs every month, is try to stay on track with a spending plan so that we're spending down according to the grant plan, and then making adjustments, which always have to happen throughout the life of a grant, so that by the time we get to the last year of the grant or towards the end of the grant, we don't have surprises. We want to be very conscious of what we're spending throughout the life of the project. And Becca helps definitely on a month to month, but also a quarterly. She takes a very high level view of what's going on with the project on a quarterly basis. So there's a lot of checks and balances in place to help you.
There is the possibility, depending on the sponsor, that you could get a no-cost extension at the end of your project. So if you still have more work to do, or your timeline got delayed somehow, you can ask the sponsor for a no-cost extension, which means they'll give you more time, but they won't give you more money, hence the no-cost extension. However, it is important to mention that you shouldn't be asking for an extension just because you have money left over. It should be because your work is not complete or there's more work you think you could do. You could build on the work you've already done. It has to be justified to the sponsor. The justification can't be that you have $10,000 left and you want to spend it. So that is important to note, that you do have the option if the sponsors are well aware, especially going through the COVID-19 pandemic, that plans change and spending habits change. If you budgeted $15,000 in travel to go to Europe for your project and then a global pandemic happened, you're probably not going to spend your travel budget, and therefore your spending plan will be a little off. So the sponsors are well aware that things change, especially when projects are 4 or 6 years long. You know, your plans could change. So that's why the no cost extension is there, but it is important to mention that it does need to be justified. So thank you, Bob, for bringing that up.
I want to mention too, on behalf of myself and Mary, we ask all the time, we ask our PIs to help us understand, what is your plan next? Like right now, we're starting to look at, well, what are you going to be wanting to spend money on in the spring, so that we can know what kind of paperwork needs to be prepared, when it's needed, and what kind of expenditures we would expect in the next semester. So that helps us help you stay on your spending plan as well.
Yeah, that's a good point, Sue. Keeping in mind that there are certain processing delays with certain expenses. So, you know, if you have to hire a student, we have to submit paperwork and it has to go through a process. Just like anything else, if you are hiring an evaluator, we have to set up a PO, things like that. Things just always take time. So like Sue mentioned, that's kind of why we start planning now for the next semester, so that if we do need to process these things, we can get it done ahead of time and we're not trying to catch up last minute. So also something good to keep in mind is the processing delays there.
What are the most common mistakes or areas of confusion you see? I think in part, these Oracle reports can look they are confusing, and they can look very intimidating if you're not used to looking at them all the time. So ask questions. We'll point you to explain as best we can. And also those account analysis reports that I talked about, those provide details that help you see exactly where in this grant statement that's on the screen, where when you see an expense during the last month, for instance, and you want to know, okay, I see travel expenses have hit the budget, but who was the traveler? What were they for? That account analysis report would show you the details of that.
I can address Bob's question in the chat. Complex reports are typically required by the sponsor at the end of the grant. So what type of fiscal information is commonly requested? And how does a PI get help from you to gather that information? The reports at the end of grants are very specific to the sponsor. So if it's a federal sponsor like NIH or NSF, they're pretty routine. NSF usually from a fiscal standpoint just needs like a final billing report, which has virtually no burden on the PI, except for that I will send you a final expenditure report and you'll sign off on that. And then the rest is done by my office. NIH gets a little bit more complex as they have a final RPPR. And generally the fiscal information for that is usually related to effort and personnel that worked on the grant and how long they worked on it, things like that. But generally, I would say as a general rule for final reports, it's important that the PI communicates what's needed to their research team, because a lot of the times they're the ones who get the information about when the report is due and what has to be on it and the template. So if you bring all that information to your SPA meeting, we can definitely help you sort it out, but it would be the PI's responsibility to initiate that. The question is, you have mentioned that funders are aware of the need for budget adjustments. Do only certain adjustments or do all adjustments require formal approval? Does this cause processing delays? That's a great question. And the answer is no, not every adjustment requires sponsor approval. But in order to know that, you'd still have to come to your SPA rep. So it's always good to ask just in case. Again, it's sponsor specific, but generally, if you're making a small adjustment within the same category, you wouldn't need to go back to the sponsor to do that. Like if you decided to hire a PhD grad student, but you budgeted for a master's grad student, things like that, typically you would not need sponsor approval for. Again, it's on a sponsor by sponsor basis, but typically small changes like that, you wouldn't, or if it's a small dollar amount, it's when you want to switch or move money between different categories. Like if you wanted to take your travel budget and use it for summer salary for yourself. Things like that would, depending on the amount, would need sponsor approval. So not in all cases you would have to go back to the sponsor, but in some situations you would need formal approval to make those adjustments.
Asking about a project initiation meeting, a PIM, we call it a PIM, PIM. What are they like? Well, it includes the SRS rep, post-award rep. It would include the SPA rep. In our case, it's Becca. The PI, anyone else the PI wishes to invite. Hopefully, they've invited either Mary or myself. And this SPA grants, the original SPA grant statement, the new statement that Becca talked about at the very beginning, how she sets that up, that would be presented. The terms and conditions of the grant is reviewed by the SRS rep. They're very valuable meetings. It's really a kickoff to your project, and it's a great time for me to ask you and ask SPA any questions I have or we have together about how the grant will be executed. And just to clarify all the expectations with all parties present. And then we celebrate by starting to work on the grant. I hope that answers that question.
The question is about timeliness and reviewing statements if something was posted incorrectly. So going back to the most important things that PI should know when reviewing their statements. Like I said, if something looks odd or something looks, way higher than you had expected, or if there was, like I mentioned before, if there was an equipment charge that hit, but you didn't buy equipment, that's where we see a lot of the errors. And in order to correct these, if there is a mistake, we have to be sure that we're doing it in a timely fashion. A general rule for grant management, and that's dictated by uniform guidance, is there's a 90-day rule. So we are required to make any adjustments or corrections for errors within 90 days. And if you are making adjustments after 90 days, it's kind of like a red flag from an audit perspective on a grant, because we really should be catching these things in a timely fashion. The PIs should be reviewing their statements in conjunction with the research admins. We should be catching any errors within that time. And that's just the time that they dictate is 90 days. So it's not to say that, things happen and we can't go back further than 90 days, but it is, in certain cases, we absolutely cannot. And again, it depends on the sponsor and things like that. But as a general rule, we should be correcting things within 90 days. So that just goes again back to the importance of the PIs reviewing their monthly statements and asking questions that they need to be asking so that we can get things corrected in a timely manner. The next question is about changing the degree of effort for some people on the grant sometimes requires sponsor approval. Correct. Yes, depending on how much you want to change the effort on the project, you would have to go back to the sponsor. Typically, if a PI wants to change their own effort, if they're adjusting it by more than 25% over the life of the project, then we would have to go back to the sponsor for approval. The thought process there is that when you proposed on the grant, you kind of said you were going to do one thing. And if you're adjusting your effort by more than 25%, you're probably deviating from what you had originally sought out to do and the task you were originally going to accomplish. Whether you're going above and beyond by 25% or you're decreasing your effort by 25%, we would need to go back to the sponsor so that they would know, because that could possibly trigger a change in the scope of work. And that's something the sponsor would need to be aware of. And that rule goes for all senior personnel on the grant. So whether it's the PI, the co-PI, any senior personnel who are working, if their effort is going to be changed more than 25% over the life of the grant, then you would need sponsor approval in order to do that. If you do need sponsor approval, if you talk to your SPA rep and it does sound like you need sponsor approval, we would work with SRS to go back to the sponsor and submit a formal request. So that's kind of a joint effort between the PI, SPA, and SRS, but SRS would actually send the formal request to the sponsor for approval.
Lori put a reminder in the chat to clarify. SRS post-award is the post-award rep for NTID is Nick Rogers. Well, thank you all for coming. We very much appreciate it.
And Lori, I just want to also thank our interpreters and captionists today. And as Bob just put in the chat, he's thanking all of you post-award folks for keeping the audit monster away and keeping PIs out of jail. That is a true statement. You guys are fabulous. I will never do post-award, so I give you guys all the credit. It really is hard, and we appreciate all the work you do. And like Sue said, if you have any follow-up questions, you can always email Becca and Sue and Mary if she's your rep. And Nancy will be sending out their PowerPoint along with the reminder for the evaluation link. I did add the evaluation link a while ago in the chat, so you can scroll up for that or just wait for Nancy's email.
Goodbye, everyone. Have a great weekend.
Thank you, everyone.